Good afternoon, everyone, and welcome to this month's webinar. My name is Megan Blosky, and I am a Senior Assurance Manager here at Henry Warren LLP. Joining me today is Tristan Pettigrew, a manager with the firm as well. Today, we will be talking about the T3010 Registered Charity Information Return. We would like to start by reminding everyone that every circumstance is unique and the information presented here today is for information purposes only. We recommend you discuss your specific situation with your professional advisors. On today's webinar, we will be talking about some general information with respect to the T3010, and then we will do a deeper dive into the main sections that need to be completed. At the end of the presentation, we will take a question and answer period. Questions can be submitted through the Zoom question feature located at the bottom of your screen.
Okay, so we're going to start off with just some general high-level information about the T3010. So what is it? The Registered Charity Information Return is a form that needs to be prepared by all registered charities on an annual basis and filed with the Canada Revenue Agency, or CRA. Once the CRA obtains this information, they summarize it and make it available to the public on their website. Note that not all information is made available to the public. Some of it is kept confidential. There are two ways that the T3010 can be filed. The first is through My Business Account, so that's CRA's online service. And the second is by mail, so you can print out the form and mail it to the CRA. As with all CRA filings, it is really important to have a good understanding of the deadline of when the T3010 needs to be filed. So in this case, it's 6 months after the charity's fiscal year end. So if, for example, your charity has a December 31st year end, the deadline to file the T3010 would be June 30th of the following year. Now, even though there's no tax to pay, it is important to file before the deadline because there are consequences for failing to file, including a loss of charitable status and a penalty of $500.
Next, we're going to talk about some of the charity information that has to be included in the T3010. There are three main sections that need to be considered. The first of those sections, which we're going to discuss here, is the charity information. This is where the organization provides information about their various charitable activities throughout the year. We will cover some of the main topics in this section now. One of the items that the charity must provide is a summary of its new and ongoing programs. This information will be published to the CRA's website. This is a good opportunity to talk about the programs that support the charity's purpose and maybe even appeal to potential donors who might review the CRA's charity and giving website before making a donation. There is also a checklist in this part of the T3010 about the different types of fundraising activities that have occurred in the year. The charity will need to check off the ones that apply to its situation. Examples include auctions, fundraising dinners or galas, tournaments, or targeted contacts. If your charity worked with external fundraisers during the year, you will need to provide information related to this relationship, such as how much revenue was collected by the fundraiser and how they were compensated. The charity also needs to provide information related to employees if compensation was paid. If you have employees, you will need to categorize the compensation for the top 10 employees in the organization into different brackets set out by the CRA. In addition, you will need to provide the number of employees and the total compensation received by both full-time employees and part-time employees. If the charity receives a donation or gift that is valued at more than $10,000 from a donor outside of Canada, who is not a resident of Canada or other certain conditions as laid out by the CRA, information about the donor and gift will need to be provided on the T3010, but it is kept confidential by the CRA. If the charity has activities outside of Canada, you will need to provide information related to these activities, including the total expenditure on them, organizations or individuals you worked with to deliver these activities in these foreign countries, and what countries these activities occurred in. Next, if the organization received any non-cash gifts, such as artwork, medical equipment, publicly traded shares are a very common one. You will need to go through a checklist that shows what type of items were received and what the value of any donation receipts issued on those items were. Two new considerations for 2023 were grants to non-qualified donees and donor-advised funds. These are newer topics introduced by the CRA. A non-qualified donees are organizations, whether they are operating in Canada or internationally, that contribute to the charitable activities, but do not have a registered charity status with the CRA. There are specific rules around charities' relationships with non-qualified donees that you should be familiar with. Additionally, donor advised funds are those which the donor can direct how the funds will be spent and used in the future.
Okay, so the second main section of the T3010 now is information on the directors and trustees. So this information is prepared on a separate form called the T1235. Now, even though it is a separate form, it does have to be included with the T3010 upon filing. So it's really all part of that T3010 registered charity information package. And so essentially what it requires is information on any individual who served as a director or a trustee of the organization at any point in the fiscal year. So this includes any director that joined the board during the fiscal year or resigned from the board. And so information that is or has to be reported on the 1235 that is publicly available include the full names and positions of the directors, trustees. So positions can include, president, vice president, treasurer, etc. The start dates and, if applicable, end dates of the directors, and whether they're at arm's length with other directors on the board. Information that has to be reported but is kept confidential due to their sensitivity includes the addresses, phone numbers, and birth dates of the directors.
The final section of the T3010 is in regards to the financial information. This includes the assets and liabilities at the end of the fiscal year and the revenues and expenses earned and incurred during the year. In addition to the basic financial information section of the T3010, there is also a more detailed financial information section that needs to be filled out instead of the basic section if certain thresholds are met. These thresholds include revenues in excess of $100,000 in the year, property not used in charitable activities in excess of $25,000, or if the charity was granted permission to accumulate funds during the year by the CRA. It is also important to note that even though this financial information is reported on the T3010, the charity is still required to attach a copy of its annual financial statements along with the T3010. If you're filing by mail, these can just be mailed into the CRA, or if you're completing the charity return through the My Account feature, it can be uploaded to the website. This financial information will appear on the CRA's charity and giving website for potential donors or others to access. First, revenues. When listing out the revenue amounts, there will be a variety of different options on how the revenue can be categorized. The main categories include gifts for which donation receipts were issued, gifts for which donation receipts were not issued, funding from various levels of government, fundraising revenues, investment income, and proceeds from the sale of goods and services. It is possible that some sources of revenue could fit into multiple categories. If that's the case, the most applicable category should be used. There is also another category if the type of revenue just doesn't really fit into any of the other buckets. Finally, expenditures will need to be disclosed based on the type of expenses they are, such as salaries, off expenses, amortization, etc. This categorization will generally be in line with how they are presented in the financial statements. In addition to reporting the expenses, you will also need to recategorize the expenses into 3 categories as set out by the CRA. Those include administrative expenses, charitable expenses, and fundraising expenses. The totals of these amounts will be applicable for the next 2 sections we're going to discuss.
Okay, so now we've gone through kind of the 3 main sections of the T3010, and now we're going to look at, as Megan mentioned, 2 sort of calculations, if you will, that the CRA is looking at when they're analyzing the information on the T3010. And so the first of those is the disbursement quota. So we have that kind of definition of our first point here, and I'll read it out. The disbursement quota is the minimum amount that a registered charity is required to spend each year on A, its own charitable activities, and B, qualifying disbursements through gifts to qualified donees or grants to non-qualified donees. And really the kind of purpose here, or the reason that the CRA has this in place, is because it doesn't want charities to be accumulating all these assets that it isn't using for charitable purposes. And so how do they calculate this? Well, first they start off by looking at the average value of property not used in charitable or administrative activities. And just for simplicity going forward, I'm going to refer to that as non-charitable property. And so what are some examples of this? Well, one thing that could potentially be considered non-charitable property is investments. So maybe a GIC, for example, that's generating interest income. That could be considered non-charitable property. Another example could be a building if it's being rented out to a third-party organization not related to the charity's activities. That portion of the building could be considered non-charitable property. So once that figure has been determined, a rate or percentage is applied to that figure in order to calculate the disbursement quota. Now, it should be noted that the CRA does allow for an accumulation of a certain amount of non-charitable property before a disbursement quota is calculated. For public and private foundations, this threshold is $25,000, and for all other registered charities, this threshold is $100,000. But if non-charitable property exceeds those thresholds, a rate of 3.5% will be applied to the non-charitable property. If that non-charitable property exceeds $1 million, that excess over 1 million has a rate of 5% applied to it instead of 3.5%. Now, it should be noted that if you have excess distributions in any year, so the amount that you spend on charitable activities or qualifying disbursements exceeds the amount of your disbursement quota, that excess can be carried forward for a period of 5 years to cover any potential future shortfalls. So, for example, if in 2023 you had an excess of $100,000, and in 2024 you have a shortfall of $25,000, the excess from 2023 can be used to cover the shortfall from 2024, and then that remaining $75,000 can now be carried forward 4 more years. But if there is a shortfall in a certain year and there isn't enough excess distributions from prior years to cover that, the charity does run the risk of having its charitable status revoked. So very important to keep an eye on disbursement quotas each year.
Similar to the disbursement quota, there's another ratio that comes out of the T3010. However, this one is a bit unusual as there isn't actually a spot on the T3010 that directly calculates or shows what an organization's fundraising ratio is. Instead, it's a ratio that can be calculated based on the information provided on the T3010. The CRA uses the fundraising ratio to ensure that charities are operating within the expected parameters when it comes to fundraising events. With the fundraising ratio, the CRA wants to make sure that the charity isn't engaging in what they consider any unacceptable fundraising. The CRA defines unacceptable fundraising as fundraising by registered charities must be conducted within legal parameters. Fundraising is acceptable unless it is for the purpose of the charity, not for the purpose of the charity, sorry, delivers a more than incidental private benefit to a donor. So that's the main one we're the hone in on. So that, for example, is if you have a fundraising gala that the tickets cost $1,000 for, but the event costs $900 or so to put on per employee, that would likely be, or per attendee, that would likely be deemed as unacceptable fundraising. Other unacceptable fundraising defined by the CRA is if it's illegal or contrary to public policy, is deceptive, or is an unrelated business related to the charity's purpose. To test the fundraising ratio, it is based on a percentage of the fundraising expenses compared to the fundraising revenues reported on the T3010. There are specific line items of revenues that feed into the fundraising ratio. When we talk about the fundraising ratio, the CRA has set out 3 different categories of percentages. So if the fundraising ratio is less than or equal to 35%, it is very unlikely that the CRA will raise any concerns or ask any questions about the fundraising activities of the organization, as below 35% is normally considered the acceptable range. If the fundraising ratio is between 35 and 70%, there is a risk that the CRA will investigate the fundraising ratio, and they will most likely start by looking at trends over the past few years. They may also reach out to the organization to ask some questions about the fundraising activities that occurred. If the fundraising ratio is over 70%, it is very likely that the CRA will be concerned and will do some historic review and reach out to the organization to discuss what their fundraising activities are to help verify that there has been no unacceptable fundraising. If the CRA does determine that there has been unacceptable fundraising in the year, they could revoke the organization's charitable status. So even though it's not presented in the T3010, it is very important to be aware of this ratio.
Okay, thank you everyone for coming to the webinar today. That is the content we have. At this point, if you have any questions, you can use the question and answer feature in Zoom, and we'll stick around for a few minutes to answer those questions.
Oh, we have one question so far. So the question is, who normally completes the T3010 filing for a charity? So at Henry Warren, we're largely acting as the auditors or the accountants for charities in the region. As part of those engagements, we offer our services to help them complete the T3010. So a T3010 can be completed by an accountant on behalf of the organization. In that case, the organization, an authorized representative, would still need to sign off on it on behalf of the charity and review the information included on there. Other times, some charities will prefer to have the T3010 prepared by a member of their staff or a member maybe of the executive team, or sometimes it's a member of the board of directors that will complete the T3010 on the organization. The CRA does not dictate who can complete a T3010, but the individual signing off on verifying the information inside the T3010 must be an authorized representative of the charity and be on record with the CRA as such. Okay, we don't have any more questions at the time, so I think we'll wrap it up and leave it here for the day. But if anyone has questions, please feel free to reach out to Tristan or myself or anyone else at Henry Warren, and we would be happy to help. Thank you so much.